The U.S. economy is looking increasingly unstable, with many suggesting a recession is on the near horizon. How likely is it? And as overseas Chinese students stage rallies in support of Beijing's stance on Hong Kong, does this demonstrate a surge in patriotism? Welcome to The Point, an opinion show coming to you live from Beijing. I'm Li Xin. A key indicator suggests that the U.S. economy may be stalling or even heading for a recession. Following an inverted yield curve, Bank of America is now predicting a 1 in 3 chance of an economic recession in 2020. A recent survey also showed that more than 70% of responding economists think a U.S. recession will strike by the end of 2021, despite the Trump administration categorically denying the risks. President Trump's top economic advisor Larry Kudlow and Peter Navarro, one of President Trump's top trade advisors, appeared on a total of 5 TV shows over the weekend to defend the U.S. economy. Just how far is the U.S. from a recession, and what role did the U.S.'s trade war with China have to play? I'm joined from Washington, D.C. by James Early, the CEO of investment research firm Stansberry China, and here in the Beijing studio, Professor Dai Xianfeng, an adjunct professor at Renmin University of China. Gentlemen, welcome to The Point. First of all, let's read a few recent headlines in mainstream U.S. media. For instance, this one on the Washington Post says 3 out of 4 economists predict a U.S. recession by 2021. Survey found by The Independent, the U.S. is being pushed towards recession, and it's totally unclear whether Trump understands what he's done. Now, by the CNN, 5 of the world's biggest economies are at risk, and here's where the U.S. stands. Stocks dive as new recession fears looms, and that was by Fox News, by the way. This one on Forbes: how will the looming recession impact global supply chains? So it seems that there is a consensus something shadowy is approaching. Just for those people who do not really understand what a yield curve is, I mean, it's as I said, it's a key indicator of confidence in the market and the likelihood of an impending recession. The 2-year, 10-year yield curve tracks interest rates of bonds as a way to measure how confident investors feel about the U.S. economy. And when long-term interest rates are lower than short-term interest rates, that's an indication of people's nervousness about economic growth. So, Professor Dai, could you first explain a little bit about what this curve is and why it can tell us about the state of the U.S. economy?
Yeah, the yield curve is, if you look at the U.S. Treasury, they issue Treasury securities. The maturity ranges anywhere from 1 month to 30 years. So for different segments of these U.S. Treasury securities, they produce different yield. Normally, the longer the maturity, the higher the yield. That's if you put all the yield together, that's the yield curve.
Okay, so what we are seeing here was this chart that I was showing you, which actually indicate how this yield curve has been developing over the years. And many people point out that it's a pattern, it's a traditional sign that a recession is coming when the yield is going into a certain pattern. For instance, that inversion, which we're seeing, that dip every now and then. It has happened before every recession since 1955, and it has always been preceded by recessions. So we want to be clear that this doesn't cause, this kind of inversion doesn't cause economic depression, but acts more like a warning. So, James, how likely are we going to see a slowdown, and what does the inversion now telling us about the state of the U.S. economy?
I think that's the big question, Xin. I mean, if you look at the New York Fed, similar to Bank of America, they're saying about a 31.5% chance of recession in the next year. The logic, yes, 7 out of the 7 past recessions have been preceded by an inverted yield curve, because that shows investors are showing a preference for the longer end as they seek safety. Now, there is one argument that this time may be different. That argument is that $15 trillion of debt globally is trading at negative interest rates. Interest rates are just really low overall, and a lot of foreign investors are piling into U.S. bonds because they want a little bit more money and a little bit more safety. So interest rates are low here too, but maybe we're like the least drunk driver on the road, so to speak. I don't know who's right. I think it is clear that for a $20 trillion economy, no one number can predict a recession. We're certainly edging closer to that, but will this actually mean a recession, and when? We still have to find out.
Professor Dai, how do you look at the possibility of an economic recession? How far away is the U.S. economy at this moment, or how soon it's going to come? I mean, looking at the headlines we were looking, you get the sense that something is looming.
Yeah, people begin to worry about the potential recession in U.S. ever since, maybe a couple of years ago. And the yield curve inversion is a very strong warning signal. Mm-hmm. It is very important because the U.S. Treasury market is the most liquid market in the world. So basically, people pay attention to it because it represents the collective wisdom of all the investors. So yield curve inversion has caused a lot of attention ever since last December, and then is coming this March, you get a yield curve inversion happening between the 3-month and the 10-year segments, and it pretty much stayed there ever since. And most recently, we get the 10-year and 2-year segment inversion that really caused market to pay attention to it.
What are the factors behind such inversions happening, Professor Dai?
I mean, on one hand, because U.S. recovery has been long, it's the longest ever on record. Mm-hmm. So that's why people begin to really get worried. Starting a couple of years ago, that's just a natural part of the capitalist market. You get a business cycle. And on top of that, entering 2018, you got a whole bunch of geopolitical developments, and the China-U.S. trade war, I just add to it, and creates a lot of uncertainties. Mm-hmm. And when people facing uncertainties, they stop consuming and they stop investing.
James, what's your take on the question, the factors driving not just the 3 months 10-year yield curve, but the 2-year 10-year yield curve going into inversion territory?
Well, I just want to point out also that the 2-year 10-year, which is the one that basically freaked everybody out last week, and the Dow dropped 800 points, which is 3.1%. That's a big drop. That is since uninverted. It was kind of a quick little blip and it's back up, but it did invert. We have a market that is strong but also sensitive right now. Trees don't go to the sky. It's been 11 years of U.S. expansion. Nothing continues forever, so everybody's wondering, when's it going to turn? When's it going to turn? We've got great jobs. Unemployment is the lowest it's been in 50 years. The quit rate is fantastic. Retail sales were strong. All these great things. On the other hand, everybody knows the party can't continue forever, and this trade war has certainly been a catalyst of fear. So, look, I mean, I went back and looked just for fun. I Googled, is the U.S. headed into a recession? And I found articles from this year, from 2018, 2017, 2016, 2015, I mean, probably going back 5 or 6 years. Experts predict recession coming. Experts predict recession coming. So experts really don't know. People have been saying this for a long time, but at some point it will happen.
Oh, yeah, well, experts could be right, too, at this. Before the last recession, for instance, one of President Trump's economic advisors famously said that it was not going to happen. For instance, Kudlow wrote in December 2007 that there was no recession coming, just before the most significant recession the U.S. has endured since the Great Depression. And, what are the chances that this time people could be, also going to witness the same thing, Professor Dai?
Yeah, I mean, predicting future is the most difficult thing to do, right? But people trying. You go back to 2007, and just to be fair, and 2007 recession, a few people did predict it, and it was missed by a lot of people. Okay, but it's a hard thing to do. Mm-hmm. And when I talk about a yield curve, That's the reason people really pay attention to the yield curve, because that's the collective wisdom of the whole market.
Well, it's one thing to say that the recession is coming sooner or later in the future, but it's another to say there's no recession coming. I think there's a difference there. James, what's your reaction there?
Yeah, I mean, you look at somebody like, Peter Navarro, who said, look, the yield curve didn't technically invert or something like that. I mean, it did invert. These guys have a motivation, like leaders anywhere, frankly, Xin, to be positive, because they know there's a connection between how people feel. Economics is ultimately a social science. It's not a mathematical science. It's a social science driven by psychology, and people are aware of that. But the one point I want to add here is that even if this yield curve means the recession is coming, if you look at the data, it could come anywhere from now or 2 years from now. And the stock market typically goes up something like 15% in the year following a yield curve inversion. So that's the other kind of squirmy thing, is that when this recession comes and how bad it will be is still not clear. Ironically, the National Bureau of Economic Research only defines recessions in retrospect. It's just kind of, it's like being drunk at a party and finding out via video what you did. It's just so hard to know. So I think what people really care about is what about their jobs and what about their wealth. So employment and stock market, regardless of whether or not there's a technical recession, those are the two variables that really matter.
So President Trump had the big guns out at the weekend trying to convince the American public that the economy is in robust health. He said our economy is very strong. Our economy is best in the world by far, and China eating tariffs. And among the many tweets he sent out, he also said with tariffs, import prices down. So guys, how do you look at these statements that President Trump is trying to make? I mean, yes, I understand the necessity to keep people feeling positive, feeling hopeful, feeling certain about their economic performance, but on the other hand, where's the borderline? Professor Dai.
Yeah, that's his job, right? He's talking up everything, and he tried
but down the import prices.
Yeah, he tried to be positive, and he tried to talk up. But the truth is, I mean, what's going on right now, especially the trade war, it's hurting everybody. And we're talking about the U.S. and China, but probably we didn't pay attention to another victim. That's Germany, and the Eurozone is doing really poorly.
How big is the part of President Trump's trade war with China playing on the prospect of a recession, Professor Dai?
I think that's one of the significant piece. Another one I talked about earlier before, right? It's just recession is a natural, it's just a natural thing for a capitalist economy. Right? But coming 2018. You add to that a lot of uncertainties created
well, people
by
are already
trade
expecting
war.
some kind of a recession happening in the near future. Then you have the trade war that certainly doesn't help things, right? If you want to talk things up, this is not going to help people boost their sense of certainty.
That's right.
Yeah. James, what's your take, very briefly?
Mathematically, you can show all kinds of numbers showing how much or how little the trade war is hurting the U.S., but it's certainly hurting the U.S., like Professor Dai said. It's certainly hurting China, too. A trade war is the only kind of war in which everybody clearly loses. So I'm hopeful. I don't know if I'm going to be accurate, but I'm hopeful that we can both resolve something here. I would love to see that, because the U.S. and China are major trading partners, and I would love to see things smoother rather than more rocky on this front.
We too. Thank you very much to my two guests, James Early from Stansberry China and Professor Dai Xianfeng from Renmin University of China. You're watching The Point with me, Li Xin. We'll take a short break, and when we come back, we'll be asking what's behind the apparent rise in young Chinese people speaking out in defense of their country. Keep watching.